Looks like risk back on the table this week. We had positive consumer numbers out to the US on Friday. China's held off on raising interest rates for the time being, and the rand still trading below 690, but really battling to break much lower.
Yes, good morning to you, Steve. And it does seem as though there's a lot of indecision out there. We're winding down into the holiday period, and if we just look at euro dollar, it's also kind of trapped in a fairly tight range. And I think the same is going to be said for dollar rand for the rest of this week. Of course, Thursday is a public holiday. A lot of people will be taking a 5-day long weekend. So I think that 685 up to 695 is really going to hold for a second week. And you know, as you said, risk on. So if anything, the bias is for a slightly firmer rand. But we're not breaking below that 685 to the downside, no.
How about the dollar-euro movements in the meantime? Because we saw the dollar strengthening quite significantly against the euro during last week. Is that holding through?
Yeah, but again, there's still a lot of indecision in that market. It's really it did strengthen last week, but you know, we've seen, I think, a lot of the big moves already for this year, and I think things are probably going to quieten down. There might be a little bit of volatility, but that volatility is going to keep the currency still within a fairly tight range, just oscillating accordingly.
I think the markets might be quite relieved this morning that China didn't raise interest rates, as was perhaps expected over the weekend. Inflation coming in 5.1%, now appeared a bit higher than expected. It has raised reserve requirements again for banks. What do you make of the moves coming out of China to counter inflation in that economy?
Yeah, I mean, you know, inflation in China is now sitting at 2-year highs, and I think the risk is there that they will start tightening up on the interest rate side of things. They have increased those reserve requirements, as you mentioned. But you know, I think in the coming year, we could very well see the Central Bank of China hiking its stance. Some people are saying as much as 75 basis points over the course of next year. And of course, if inflation pressures continue to mount, then that's a very likely scenario. At this stage, they've held off, and I think they probably will hold off for the rest of this year. As I said again, you know, we're in these funny times, and they're probably going to want more of a discernible trend before they start pulling the trigger. They have been tightening rates in a very gradual fashion, and I think that's just the way we've got to get used to China and everything that they do. It's going to be slow and gradual, and according to their terms. So I think in the new year we'll probably see some tightening. But
our own inflation coming out tomorrow. CPI has been brought forward from Wednesday due to the public holiday on Thursday. Markets expecting a slight uptick from the 3.4% reading we got in October. What are you looking for there, Michael?
Yeah, we're bang in line with the consensus. We're going for a 3.5% year-on-year growth in inflation at the consumer level. Of course, we had that 3.2% in September, 3.4% last month, as you mentioned. So we're thinking that we're going to get confirmation that the inflation cycle has turned the corner and we're starting to head higher, and that will probably grow as we enter into the new year. We're not expecting a sharp increase in inflation next year. We expect it to remain well within the target band, but much will depend on, of course, the currency developments. If the rand remains down here, then inflation is likely to remain fairly tame if one thinks of things like food inflation. But we don't think that the Reserve Bank is going to need to cut interest rates again, and part of the reason for that is because inflation has probably turned the corner and we're probably going to start drifting higher, as I said.
And of course, that's a Reserve Bank meeting coming through in January as well. PPI Wednesday, of course, there's not such a big focus on the PPI figure anymore, is there, Michael?
Yeah, it's because of that feed-through effect not being as strong. And if we look at the market, you know, just harping on those interest rate expectations, the chances of an interest rate cut at the January meeting seem to be dissipating. Of course, as inflation creeps higher, even if interest rates remain on hold, we're probably going to get a bit of erosion of our real interest rate differentials, which we believe will be negative for the currency. Real interest rate differentials have been increasing, even though we've been cutting interest rates this year. Yields have not declined to the same extent as inflation has, and that's enhanced the rand's sort of carry trade appeal from a real interest rate differential perspective. So that could again, just add to our argument that the rand has probably run its course in terms of its strengthening cycle and probably will drift weaker through the course of 2011.